So
and we also asked our resident expert in special education, Allison Collins, is also with us tonight, and I saw her.
Oh, great. Okay, great.
I'm here. I'm going to turn on my video in a minute.
Okay, thanks, Allison. So I will call the Finance Committee meeting to order at 7:04 p.m. on January 13th. Our first item on the agenda is a presentation from the Manchester Essex Regional School District regarding their fiscal year 23 budget. So if you guys will take it.
Sure. Good to be with you again in our annual visit to talk about finances. We plan to do the presentation like we've done in the past. I'll give you the kind of the headlines. Avi will give you some details. We won't go too deep into any one topic as to conserve time. Allison's going to run us through. You had mentioned special ed. You're going to see if you've been to our presentations thus far this year, you know that we're struggling a little bit with managing our out-of-district costs. That's a key driver for us. And Allison can give you a lot of detail on what we do day to day to try to manage that. She's our best spokesperson on that front. And then we will only have time for questions because we know you have them.
Great, thank you.
This year is not unlike any other year, which is our goal is to deliver a level services budget that hits the 3.5% assessment target increase, the one we always strive to get beneath, but keeps us in our, keeps everybody's models from breaking, even though we know the goal is to always try to bring in the most efficient budget. And I think we have that. What you're going to see, if you haven't tuned in yet, is that to get there, we have a considerable budget gap. So we have brought it in at 3.5%, and we've left ourselves the chore of identifying approximately $650,000 in new gap reductions to land it where we need it to be. So we'll talk a little bit about our game plan there. Our key drivers for creating the gap are health insurance, particularly retiree health this year, and the out-of-district budget. We are currently in contract, we're supposed to be in contract negotiations. We are in talks with the association to see what the timeline is. Our hope had been to get started in the fall. That didn't happen. So we are now looking at what a reasonable timeline is for this year to bring something to completion, but we're currently carrying what they are contracted for this year, which is a 2.5% increase. Other than that, we're calling it a plain vanilla budget. We're not seeking to expand any programs or introduce any new expenditures that would expand the operating budget. We're really just working day to day to try and maintain level services with the available revenue and resources that we have. So Avi, do you want to jump in and give some of the technical details that underlie the headlines?
We're happy to do that. And we have a bunch of slides tonight, some of which start with items that we presented at the tentative budget school committee, with a little bit added as we went into the tentative budget public hearing at the end of December or mid-December. And then we had another school committee meeting earlier this week. Not a lot's really changed on the drivers, but we're starting to strategize, as Pam had talked about, around what we might do with the gap that we're facing. But also, we did provide a little bit additional information about what's going on with out-of-district tuitions. And so having Allison Collins here tonight will help us. She was, presented a little bit of that information on Tuesday. So I'm going to go through the slides. I am happy. This is a meeting for you. And so it's really designed to do what you guys want with the time. So from a time allocation standpoint, I'm happy to kind of give a detailed overview. If people didn't really make it to those presentations, I'm happy to do an express version and move to questions and answers. If you have a sense ahead of time of what you'd like to do, please just let me know. But I'm happy to do whatever you think is best with the time we have.
My guess is you should go through the presentation.
Terrific. Great. And I will try to, yeah.
If people have questions along the way, I ask them to chime in based on the sharing screen. I can't see other people, so they need to chime in.
Okay. Terrific. Thank you. So, and the other things that I did bring with me to put up on the screen are some of the budget documents that we just, this is typically the time of year where the full budget document with all the pages gets introduced in draft form, even though it's not final yet. And that includes things like the apportionment formula, which I know is always of interest. So we have some slides for that. I have some schedules for that. I'm happy to show how that's working because I know there'll be some questions potentially about the differences between Manchester and Essex as an example, some enrollment information, lots of things to share. So let's get started. And I think Pam's already hit on the fact, and I'm not going to read the slides. I believe they've been posted and we'll make sure to send them around. So I'm going to just really hit the high points from these items rather than go through every detail.
Great.
So we talked about the target 3.5% assessment. In past couple of years, we've been really trying to begin with the end in mind, which is having any work that we need to do not become your work by giving you an assessment that immediately puts, the towns into a place where they're trying to balance their levy limit. So that's how we've started in the past couple of years and why we're talking about having a gap to get to that point, which is a gap that, it's our intention to manage that. Pam talked about the major drivers. To give you some statistics there. If you were to take out the out-of-district tuition and transportation, the tentative budget gap would just be 243,000 instead of 648. So that's really a big driver. It's typically not a big percentage of costs, as you'll see, but it is a big portion of the increase in the budget this year. Personnel growth is at 4.1%, but if you were to take out some of the the increases that we've had in one-to-one teaching assistants that are also part of our strategy to keep kids in district in the special ed area, we'd be looking at 3.2%. So in terms of the run rate of keeping things the same, with this is generally a level services budget, we would be at 3.2% for personnel increases in terms of total dollars, no new FTE there. But with the addition of some of the one-to-one aides that we've needed to add to keep kids in district, that total number. It's about 160,000. That's bringing us to just almost 4.1% on the personnel side.
Abby, we're still on the title page.
You cannot see operating budget overview?
No, you're still stuck. You've got to advance on the side. We're still stuck on the front slide.
I'm glad you told me that. Okay, so
I was just about to text you.
So funny. So I'm wondering if it's because I'm in slide.
I think you need to go down the slide. It looks like you're stuck on one and you just need to.
Yeah, it's showing on mine. I think it's when I, give me one moment.
Okay.
Because when I have it in presentation mode, I think that's not jiving so well. So let me try one more time and you can tell me. Can you see this slide now?
Yes,
that works.
Okay, I'm
Thank you.
sorry.
No problem.
I'm going to breeze. So this was this 648 gap. Here's where we were talking about some of the numbers here about the 405,000 for out of district. And here's where we were just getting to some of the personnel changes that I was talking about. It's a 3.2% level services run rate, but we have an additional approximately $165,000 in one-to-one special ed teaching assistants that we've introduced this year. So they're going to be carried forward next year to help keep kids in district. So,
and Abby, how many people is that?
Well, it's about 5+ FTE. It's
okay.
the typical rate is about $30,000 for a step 4 aid ballpark. So really those items, if you take those out, you can see that the gap is really only 78,000. So this is really where our gap is primarily. But we also have the health insurance issue that we were talking about too. The last thing I just want to hit on before we move on is just that COVID costs are not in our operating budget. We have segregated those into one-time costs to be covered as much as possible by some of the federal reimbursement programs, and to the extent that those can't cover what we need through reserve funds. And if you have seen any of our presentations over the past year and a half talking about this issue, we've spent around $1.5 million on COVID response. And initially we were getting a lot of zeros from the feds. But that picture has changed favorably in terms of the funding reimbursements. FEMA came back after giving us nothing and has revisited its numbers. Manchester and Essex have both been really amazing in helping us with any leftover CARES funds that can go to covering some of our costs. And there have been 2 or 3 more rounds of federal funding for school districts as well. So we're getting pretty close to break even on those amounts, where we might be in the $0 to $200,000 range, depending on how things end up, which is much better than when we were thinking we were over $1 million of a potential hit to reserves. So that's about the last you'll hear me talk about COVID, since it's not in the operating budget, but we're happy to answer questions about that as we go along. So major budgetary drivers. Yes.
Just one quick question. I'm sure it's somewhere else in there, but since you mentioned it, what's the balance in the reserves roughly right now?
I'm going to hit on that a little bit later, where I can show you all the numbers in detail. So if you can stick with me on that, I'll come back to it if that's okay. But it's over, just to give you the quick number if you want it before we come back to it.
Level.
Give me a second.
To the nearest million. How's that?
Yeah, so we are ending 21 around 3.9 unaudited, but we've already spent a portion of that, and that's we're looking to be around $3 million prior to some of the needs that we know we're going to have. So, and I'll come back to the details on reserves.
So I'll say somewhere between 3 and 4. How's that?
Mm-hmm.
Between 2 and 3.
Okay.
But yeah,
between 2 and 3.
Yeah, and so where we were in the low teens as a percent of budget, like 13%, we're now going to be floating with the high single digits to right around 10% of budget. But we're going to get into some issues that we have there, which are basically capital needs, which is really what we want to spend them on, plus also obviously potentially plugging the hole on the revenue side with potential reserves. So more to come on that. So on the personnel side, I talked about the 4.1% spending growth and how it's 3.2% excluding the one-to-one aides. The assumption in the budget for cost of living adjustment is 2.5% district-wide for all personnel. And so that's what's in there right now. We are in the last year of a contract right now with the Teachers Association, as Pam mentioned. So that's consistent with the past 3 years.
Avi, when you say you're in the last year of a contract, is that this current year or next year?
The current year. So, yep. So fiscal 23 is the budget we're talking about, would be the first year of a new contract.
Okay, thank you.
Yep. So insurance and pension is the next biggest area of spending and spending growth. You can see because of the size of these items, and just to hop around a little bit, you can see how our spending, these is percent of spending, 65% of personnel, 20% next being insurance and pension. And you can see out of district is very small as a percent, but this is percent of spending. We're going to get into percent of growth in a second. So coming back to these drivers, moving to the second category, insurance and pension. Right now, we've got a 6.4% spending increase, which includes a 10% rate assumption for health insurance. And we have some savings because we're carrying forward better than budget for the current fiscal year. So that savings lowers the base. So we won't have to have the 10% all flow through the budget because we're going to have some savings that come back because we did better than expected. We had a 4% estimate for the current year, and we came in just under break even, slight reduction, which was great. And part of what was happening, which I'm sure the town has seen and a lot of other municipalities are seeing and private employers as well, is a dip in utilization during COVID when people were staying home. And obviously that was temporary and starting to change. And so with 6 to 8% being the standard industry rate, it's really a little early to know where we're going to land. So the reason we're at 10% is because the very few months of data we have are slightly above industry trend, but not heavily. But we also need to build in some capacity, and we typically monitor this data on a month-by-month basis until we get the final answer, which we get right around beginning of April after our budget is adopted, unfortunately. So this number could come down, but I would say based on what I'm hearing from our insurance provider, it's a reasonable estimate. They don't think it's very high, even though we did much better the last year. So this is not an area that I'm currently banking on for potential savings as the months goes on, but without data, it's really just really too hard to say. The real story here on health insurance, though, is retiree health insurance, because with a 10% rate increase, that line is growing 14% because we're continuously adding new heads. The number of insured retirees is now 168, which compares to 166 active employees. And when we regionalized, we started with 0 retirees because the towns of Essex and Manchester took all school personnel retirees that were pre-existing. So this is really just ramped, which is exactly, if you're an OPEB follower, this is exactly what people talk about when they talk about with OPEB, and why we're so glad that, with our current OPEB funding plan, we're now funding about 95% of our annual required cost. So that plan that we did several years ago, if you're new, you may not know, we had a collaborative agreement with the Teachers Association to bring in cheaper programs and to take the money and to put that in a funding plan for OPEB. And that goes every year to our OPEB trust. And we're putting in between $500,000 and $600,000 a year, which is being managed by PRIT, the PRIT fund, so we can get a return on investments. But clearly that's a big area, $152,000 of new growth in that area, which brings us to OutofDistrict and the numbers we've talked about. 28% is the amount that's hitting the budget, as I'll show you a little bit later. There are some costs of growth that are actually hitting other revenue streams, like the circuit breaker program. It's a state aid program, which as tuitions go up, the state participates a little bit more in some of the excess costs. It's not dollar for dollar, but that helps to mitigate some of the growth that we would otherwise be facing in the budget. And mostly what we've seen, and Allison can talk to this more and much more specifically, but I could just say at a high level, because we've had success with our InDistrict programs, which she'll explain, more and more the types of students that are going out of district are higher cost placements. And so this year we have in our budget estimates about 9 that are for $100,000 plus per student per year. So you can see really, with an average per pupil expenditure of typically around $18,000 district wide, these numbers can really have a noticeable impact to the budget. So those are your major drivers, for the high level numbers of what is our budget in 28.9 million. The spending increase. Yes.
Can I ask a question on the out
Please.
of district?
Yep.
Am I correct? We don't have to pay out of district for any choice students?
Correct.
That is correct.
Okay, thank you.
Yep.
Sorry.
That's okay. No, please do jump in.
Good
I
question.
can't see people's
That's a good
faces as
question.
yeah. Did somebody say they had one?
No, I said it was a good question.
Okay, yeah. Yep. By all means, please jump in. So this is the size of the budget overall on the operating side. The capital budget, which I didn't include in the presentations, but I brought some slides on that. It's about $4 million. It's going to go up slightly this year as we introduce a second tranche of debt for the Memorial School project. And we're mostly bonded now. I think between the two plans, we're at about $38 million bonded out of an estimated 40 total, maybe a little bit better depending on how MSBA works. So that's why you'll see a slight increase in the capital budget. Typically that goes down every year because we structure our debt to be level principal. And with that type of a model, your costs go down year by year, unlike a mortgage style amortization program. And it does save interest over the life of the bonds. So the 3.43% spending increase is if you net out the $648,000. So if that amount comes out of spending reductions, that's where we would be, which is very much in line with the type of increases we tried to target. It's actually, if it comes all out of revenue, and I put that in here because we didn't really identify the full path of closure yet, you'd be at 5.75% spending increase, driven primarily by some of the costs we've talked about. And you can see where we've been in prior year gaps, between 600,000 for the prior year, 430,000, and in fiscal 19, we were at 900,000. That was the year we absorbed a 28% increase in health insurance. So those are some of the big picture items. And I think it's important to point out that, on a 5-year average, our assessment increase has been around 3.25%. That's before apportionment. So we feel pretty good about that because we know that we're trying to live within the levy limit. And but you can see it's getting harder to do, especially when we have some of the gaps and we start to introduce maybe one-time revenues. All right, moving along, non-town revenue. This is, when you compare our spending against hopefully a balanced budget, this is what we're getting from non-town sources, which is typically 10 to 15% of our budget. Not a lot is expected from state aid because we've been in flat to declining enrollment. And so typically what you get is minimum aid increases of about $30 per student. So that type of growth we think is very, very little and below our spending rate, which means that, it puts a higher burden on the assessments. There's been some increase in transportation aid, but these are small dollars compared to our overall budget. And we're continuing to assume that graduating school choice students get replaced with an equal number. So we're not growing that program. As Sarah pointed out, those students, if they do go out of district, that gets reimbursed by the sending district. Okay, these are some of our biggest cost items here, just for people who like to see where the funding goes. And you can see same type of thing I showed in the pie chart and where some of these items are growing. The transportation line usually is not a big item for spending growth, but you can see that it is, and that relates almost exclusively to the out-of-district transportation. We are required when a student goes out of district to transport the student to that location. And there's been a little bit of a double whammy effect there because in addition to having those needs go up, there's also just a big rate increase that's happening in the marketplace that all districts are facing due to driver shortages and the tight labor market, especially at the lower hourly rate type of positions. So if you work in an industry where you're hiring hourly wage workers, what the supply situation has been. And so that's definitely had a big impact on the price of transportation for out of district. Fortunately, our in-district regular ed transportation is on a multi-year contract, so that's been better. So, and this, these big costs are really 95% of our budget. So it does help to kind of simplify the picture. And this is what I showed you before, showing the same type of items. And here are the budget drivers. This is the pie chart that shows the growth, what's growing the most. And you can see insurance is a big portion of growth, even though it's 20% of costs, it's 35% of growth. And remember, this is a little misleading because the reductions here are an offset to these numbers. But it gives you a proportional sense of where the funding is going. And for the people who want to see, what are some of the other areas, I won't spend much time on it because this is 0.5% of growth. So it's really not material to the growth, but these are some of the other costs that people might wonder, where are they? How do we spend money on the other items? And here's what they look like. So in terms of budgetary drivers, it is important to just remind people, I know this is a topic that's come up a lot at the Finance Committee about what's mandated and what's discretionary and what's not. And you can just see, this table shows you the dollar growth in spending for each of these items. And you can see how just for these mandated areas right alone, you've got $721,000 of growth, and dealing with a gap of $648,000, you can see how this is really why Pam is able to say it's a plain vanilla budget, even though we're talking about a $648,000 gap, because this really, from a level services standpoint, there isn't a lot happening. We try to just budget the program, rolling it forward. But when we do have mandated costs, we have to deal with them. And so that's why you're seeing these items here. So retiree health, 150,000, that's about 20% of the growth. And the other three items we talked about at the outset of the presentation. So I think with that said, I'm going to hand it over, if I may, to Allison, who can talk a little bit about some of these mandated areas on the special ed side. And I can advance the slides for you, Allison, as we talk through.
That sounds great. Hi, everybody. I'm the Director of Student Services for K through 12 for the district. And as a result, I am responsible for special education, among other programs. Just to give you big picture, and people have asked some very good questions already, so I think you all have some background in this, but essentially we have about 230 students on IEPs in the district, so they're served through special education. It is a legal mandate under the Individuals with Disabilities Education Act that's been around since 1973. And we have within those students, we're providing a continuum of services and placements dependent on student needs. These are team decisions on what students need based on data, based on an evaluation process. And we have the majority of our students are working in the inclusion setting. They may have some kind of support in the classroom. They might have therapies or tutorials, like a reading tutorial or a math tutorial, depending on their disability. That's the majority of students, 147 right now, as I check the numbers. From that larger group, we have a couple smaller cohorts of students. We go from inclusive and a more inclusive environment all the way to out of district placements. So we call, in special ed, we call it more restrictive as you move from inclusion to out of district. So we have specialized in district programs, and I'll get into the savings from those programs in a moment. But the reason for not just having inclusion and some tutorials is we do have students with a higher level of need. And they're students who can't fully be served in the mainstream classroom. They need programming that's designed to meet their needs. And if we can't provide that, we're paying for out of district, which, as you've seen, there are, those are very high costs. We're dealing with rapidly increasing transportation costs, so that we're averaging about $50,000 a student for those runs, and very, very expensive. And then we have programs in out of district that will range in on the low end from $50,000 to $200,000 per student on the high end, or even a little bit more than that. So there's great motivation to create high quality, specialized in-district programs in this middle section, so that we're serving students in district at a much, much lower cost per head, and typically avoiding transportation costs. And there's great savings with that. In addition, for the most part, parents want their children to be part of the community and served in their home district. And the quality of our programs, I would certainly argue, is higher than many out of district programs even. So we are able to service 61 students through specialized in district programs. Most of these students, not every single student, but the majority of them would be out of district if we weren't doing this. So it's a big cost savings for us. So we go from inclusion, the specialized programs, to right now having 22 students in out of district programs. And I'll now get into just the cost analysis that we do.
Allison, I have a question.
Yeah, jump in.
To what extent is the categorization of students mandated by the state regulations, and to what extent do parents have influence on that?
When you say category, what it means to me is we have specific categories in special education, like specific learning disability, autism, neurological. Is that what you mean by category?
I'm talking about the inclusion tutorials versus specialized in district versus out of district.
So it's a team determination. We have people that hold certain roles within special education that are mandated to be on those teams. So the parent has to be included, so a representative from general education, often the school psychologist, special ed teacher, etc., therapists. So it's the team that makes that determination of whether the student's needs could be met in more of an inclusion environment versus needing out of district programming. So it is an individual team determination, and it is based in, we make that determination based in the law and regulations.
Thank you.
Does that help?
Yes.
That's kind of
thank you.
how it functions locally, but we're governed by laws that are state and federal, essentially, around that.
Can I ask a quick question before we leave that slide?
Of course you can.
So on that last far right, the out of district programs, the 22
Mhm.
students, just rough number, but what would you say is the aggregate dollar value of that category? Because that category is like we're cutting the check to these other basically private schools, right? We're sending the kids to another.
Yeah, Avi has that information for this year. It looks like,
It's about $2 million in the 23 budget is the estimate,
Yeah.
excluding transportation. The transportation number is about 600,000, and we'll go through the slide, how it breaks down, which part hits the budget. Because of that, right now, the budget's only going to be absorbing about $1 million due to other funding streams.
and that is an increase, and I'm going to talk about why that increase is occurring, but we have been running more like 1.5-ish. Avi, would you say prior?
Sorry, Allison. Yep. So you can see the total cost at the bottom here. And in the current year, we're right around 1.5. There's been an uptick over time. I think in the early years when Allison, before Allison started, it was probably closer to, 1.5, but more and more what we did was start to bring students in district. And now those that go out are really ones who can't be serviced by our programs. So the programs are all new since Allison's been here over the past 10 years, I would say.
Mm-hmm.
So basically, the reason that dollar went up from, say, averaging 1.5 to 2 million is it's just there's more kids falling into that more expensive bucket.
Not necessarily more kids, but more.
Yeah.
Go ahead, Allison, explain.
Yeah, let me explain. So when I got here, we were hovering in the high, from what I can recall, in the high 20s in terms of students who were placed out of district. Right now we have 22 students. So we've been in the low 20s because of programming. So it's actually less an outcome of numbers of students than it is, because that's actually gone down a bit. It's really about students having more severe needs and situations and needing more extensive programming that can be quite expensive. So if we can't do it in district because we have some excellent programs, and a student doesn't fit into one of those programs, often their needs are more unusual and quite expensive. So it's more the level of need of the student that's driving that. And the other thing that I should say is just at this particular time, and we're a very small district, so it ebbs and flows, but there are times when we've had one student in a residential program. Those are the most expensive placements. They're like the 24/7, 365-day-a-year programs. Very expensive, around $200,000 per student. We have more students placed residentially right now than we have in a while, but that does ebb and flow. And then we also have some students with severe needs whose programs are around 100,000. So it doesn't take many of those for it to have a very significant impact on the budget. And that's really what the increase is about.
Great, thanks.
Okay, great. Feel free to ask. It's just a very complicated business that we're in around special ed and the budget and the regulations. So please ask as many questions as you need to. So, but I'm glad you asked that question, just sort of where are we headed and why, and I will get into that a bit more in a minute, but I also want to talk about these in-district programs and the importance of these programs. For me, as a special ed director who's very budget conscious and very interested in school finance, I see these in-district programs as having a number of functions. One, they provide very high quality services for students, and students don't have to go elsewhere, which is what we all want in public schools. They also provide a substantial cost savings versus out-of-district placements and keep our out-of-district placement numbers low. And another thing that they do is, when I look at other communities that don't have as much of this sort of programming, they're much, much more vulnerable to wild fluctuations in their out-of-district budget. Now, it is true that we have a large increase for next year, but our budget hasn't fluctuated as much because when you have these programs, if you have a student that moves in or ages in or suddenly starts to present with more needs, typically for us, we have a program for them. But in another district that doesn't have these programs, all of a sudden you have a change, the student goes out. If that happens 7-8 times in a year, and it can and does, or somebody's demanding, has lawyers and is demanding that you pay for XYZ placement. I mean, your budget can fluctuate so much more than ours. So these programs are also a way of stabilizing the budget. So there will be changes. Everyone will tell you that about out of district, but we're keeping that fluctuation more in check by having these programs. So basically what I want to show you is the programs that we have and what we're saving by having those programs in district. And the way that I calculated that is I looked at what does it cost to have these programs? I looked at staff salaries, benefits, and then we do take tuition students in our school district, and that's totally different from school choice. What happens is we'll have another district send us public school district send us a referral for a student, say, do you have a program for this student? Could you help us out? And if the student is a very, very good fit, we have room and we know it's not going to take away from residents, we will take a tuition student. We actually have 3 right now, district-wide. We will take, and then they'll pay us tuition. So we always subtract that from the cost of doing business because it helps defray our costs. So we have the in-district cost, then the out-of-district program cost. You've got your tuition, which we've talked about a bit. You have the transportation costs of transporting the student to the school, unless they're placed residentially. And then in order to look at the big picture, we have to take the circuit breaker funding out to when we determine the net cost of out-of-district programming. I know Avi's talked to you a lot about circuit breaker. It is a state program that helps defray the cost of some of our more expensive out-of-district programs. And it isn't a dollar for dollar, like Avi said, but it does help. So what we do is we get the out-of-district net cost, we subtract the in-district net cost, and that is our savings from the in-district program. So
can I quick question?
Yeah.
Because you mentioned that a tuition student is different than a school choice, right?
Yes.
And a school choice, my understanding is the dollars that we receive is kind of a state set level, right?
It is. And
For
so
school-
it's,
right. So my question is it different for a tuition student or
oh, it's very different. Yeah. So
very different? Okay.
very different, because what happens with school choice is you're getting $5,000 a student, right, Avi? And then for special ed, if there are additional services the student gets, you'll get a little bit more than that, but it's typically not that much more. And so it's not always here, but when you take a tuition student, you set the rate. Our district sets the rate, and we set it based on what Avi and I look at is what it's costing us on a per student basis to run this program, and then you charge the other district that amount. So for example, yeah, go ahead.
What is it?
So what is it?
No,
It
I'm just
depends
curious.
on-
What? Sorry.
It depends on the program, of course, because some
Okay.
programs might involve very intensive levels of staffing, more so than others. There's more teaching assistants versus teachers. So all of that comes into play. So, but what I can tell you is we have a program, it's called IRL, IRWL, it stands for Intensive Reading Written Language. That's a program that is very similar to Landmark in the type of population it serves. And so that program where students have a higher level of independence, you'd be looking at, and don't quote me on this because we set the rates annually based on our costs, but you're looking at around $30,000. Then you look at a program like Swing, which is our severe needs program, where we have one-to-one or close to one-to-one staffing. Then you're looking at like 52, 53,000. So it's quite a range in terms of tuition, but clearly, very different from school choice reimbursement because we can set the rate based on the cost of the program per student.
Right. And I mean, obviously we must be setting the price correctly, because if we set it too high, then the other districts obviously wouldn't take us up on it, right? I would assume, right?
Well, Avi and Pam, do you want to give philosophy on that?
I was just going to say, so look, as a business person who's in the past worked on developing lines of business, my mindset is probably very much like the person who asked the question. I couldn't see who it was, but what does the market bear? Supply and demand. But this is a compliance marketplace that we're in, and typically in a compliance marketplace, you're expected to keep price in line with costs and to have that be there. So even with a number like 30 to 50,000, which is great, really what we're doing is helping to offset costs that we incur anyway because of the program. So big picture, what I would say to answer your question, I think where you're going with this, and what's similar with school choice, which you may have heard us talk about in prior years, is you're in a marginal cost type of an analysis. So for example, on the school choice side, we've said for many years, when you're getting $5,000 per student, maybe cents on the dollar for the incremental special ed costs you're allowed to claim, you're really not getting much back there. It's not a program when your average cost per student is around 18,000 where it makes sense to take kids. However, on a marginal cost basis, if you have a classroom with one or two extra spaces in there, you can take those kids, and it's kind of revenue that just comes over your cost base, and it flows to the bottom line, as we say in the corporate sector. So similarly, in the out-of-district market, we have a price that's based off of cost, but I think we're only talking about 2 or 3 students a year at this point, because mostly these are small programs. There isn't a ton of space there, and we're trying to make sure there's space for our in-district kids, because if it becomes identified as a need, we want to service that student first, both because they're a resident and because we don't want to send them out of district. So it's really more getting marginal revenue to cover your fixed cost basis. We're certainly not adding any cost to these programs to bring these kids in. And so that's why you're really only talking about 1 or 2 kids. If is that help to answer where you're going with the question? Or did,
Yeah,
is
no,
there-
that sums up nice. And this is Mike that was asking that. So thank
okay,
you.
I thought it was Mike. Hi, Mike.
And Mike, I would
Yeah.
just add the benefit that hasn't been touched upon is it's a goodwill agreement among the region to support one another in defraying out of district costs. So we wouldn't gouge another district because we have children who are placed in other districts and they're in district programs, which we may not have capacity for, and we get a better rate for it. So a lot of it is trying to help each other deal with the increasing cost of out of district placement by coming up with alternatives.
I understand, and like you said, I had the word gouge on the brain too. Obviously, we can't, but obviously we're just hoping to cover costs, and it sounds
Yes.
like we are certainly doing that. So yeah, it makes sense.
I think the other key factor is, and it didn't get mentioned, but just want to make sure people are really clear. School choice is a blind lottery by which we choose our students. And when you're taking students into the special ed program, it's first an initial discussion between schools, and then, like Allison said, you review the case to make sure the case is a fit. So we are in control of that placement. And if it's working at one point but not at another, it can always be put under review. Once a school choice student is drawn in the lottery, they are our student for their entire K-12 experience unless they choose to withdraw from the system.
Thanks, Pam. So
Just a
returning,
question.
I'm sorry, please.
No, that's fine, Allison. Obviously for school choice, once they're in the system, they're, as you say, with you through K-12, K through 12. Is that the same for the special education? If somebody comes into this program, are they obligated to stay all the way through? Or if there's a mismatch or an increase of need, that do you have the option to change that relationship or to suggest they move to another district that better serves them, or are they really placed and they stay?
So that's another nice thing about tuition, taking tuition students. I just feel, ethically, when we take a student, if they're a good fit and just to minimize transitions for kids, we would absolutely try to keep them. But if, as you said, kids' needs change, it might be we meet their needs for a time. It might be that a time comes when we feel like we're not meeting their needs anymore. Certainly, if they're not a good fit, we have the option to say, this is not a good fit. I can think of a student that we had fairly recently who just made a lot of gains in our program, and after a certain point, decided to go back to their home district. So things like that was fine. And so there is more flexibility, and the district has more opportunity, more say, much more say with a tuition student as opposed to the school choice arrangement.
Great, thanks.
So this is an overview of the savings that we have in our programs. You can see just quickly, Swing is a program for students with severe special needs. It's K through 12. What I want to tell you about that, you can see what we're saving with the 14 students that are involved in that program. One of the things that's happening with Swing is the program started around the time that I started, and we're just starting to see the students from that program move out of grade 12. And with students with severe special needs who aren't able to pass the MCAS and earn a diploma, who may eventually go on to some adult services. With those students, we are responsible for them until they're 22 years old in special education. We do not have a program for students who finish 12th grade and then, between finishing 12th grade and turning age 22, we don't have a program in district. We don't have the physical space for it. It's not a high enough incidence population. of 18 to 22, where it hasn't been to date. So we don't have a program. So we will have cost-effective programming for these students all the way up until 12th grade. But then we're starting to see these students need to be outplaced for that 4-year period, 3 or 4 year period. So depending on how old they are when they finish grade 12. So that is having an impact on our out of district budget, because students who had this programming in district all along, they're starting to have to move to out of district placement. So that is a factor in the increase in our budget. You can see we have a program called SAIL, and when it goes to high school, it's called Transitions for students with emotional disabilities and high functioning autism. And so we have programming K through 12. You can see how many students are involved with that program. It's a lot of wraparound services, social skills, therapies, behavior plans and supports for those students. And you can see what we're saving there. We have our intensive reading written language program, which is our answer to Landmark. And that program serves students in grades 2 through generally 8th grade. And the reason for that is students perform so well in that program, they typically don't need services in high school. If they do, we will give them services. They have services, but that's a situation for students with learning disabilities who have dyslexia, but they don't have these long-term needs in the way that the students in swing do. And so we really see them moving out of the program over time, which is nice to see. And interestingly, I will say that, so you can see the savings is $530,000, but it probably is much more than that, because nobody, like, we don't get asked to pay for Landmark anymore. And we used to get asked all the time by parents because we didn't have this kind of programming. So it also protects us legally from what can turn into unilateral placements and very expensive legal challenges, because parents are happy with what we have. And so there's really savings beyond those numbers for that reason. And then we have a new program we started just this year for grades 4 and 5. It's the ACE program. It's students with language disabilities and lower memory. And it's very recently started. But you can see that even in a program with 3 children, and that program will grow over time, but even in our first year, we're already saving $33,000 just with 3 students. So I know sometimes there's a question of how many students do you need to start saving money in a specialized program? And you can see we're saving money even with a group that small. And again, our programs often do start with a smaller number and then they grow over time. So that's just our savings that we're realizing through our in-district programming, which really protects us from big budget fluctuations. And then I thought I would just also share with you. So if we look at next year, and we know we're having an increase, and a part of it is that 18 to 22 population where we don't have programs. It's also another major reason why our budget is increasing is we're a small district and we ebb and flow, and we don't have a lot of students that are graduating or aging out of our programs next year. We have very few. And we also, in the next fiscal year, we will have very few as well. So we start to get into FY25, FY26, and we do start to see a little bit more relief in that area. But we just happen to have a little bit of a bubble that's around the same age, and they're going to be with us for a few more years. So if we break down, Avi, if you want to just go back to that. So if we break down, looking at the budget, and did somebody say something? I'm sorry. Okay. Just want to make sure I'm not missing a question. So when we look at the budget for next year and our projections, and we're noted, we have an increase. And so why and what does that population look like? I talked about it a little bit earlier, but here's the data. So you can see that the majority of the students who will be in out-of-district placements next year have significant behavioral and mental health needs. And when we have students who are in out-of-district placements with mental health and behavioral needs, we can really add the word safety concern, or the words safety concerns, to that descriptor. And that's 10 students who are making up a large portion of the out-of-district budget. Some of them are placed residentially because of safety issues. Then you have our severe special needs population. Those students actually are not as much placed residentially. It's just their programs tend to be more expensive. And again, a quarter of the students in that cohort are students in that 18 to 22 population. You can see that because of the strength of our in-district programs, when it's not very severe need and more complex and unusual needs, if it's not the safety concerns, they're in district. I mean, we have 3 students with complex learning disabilities or high functioning autism who are likely to be out of district next year. And the projected cost of their tuition is just such a small fraction of the budget. It's not what's impacting our budget at all. It's really these students who have the safety concerns and the severe needs. And that's it for my part of the presentation. And I'm happy to answer. People have asked questions as we went along, but what else can I answer for you?
Well, I was just about to ask what I think is on this slide, which is just how do we compare to other districts on this? So I'm guessing the answer is on this slide, right?
It is. Yes, very
Compare
favorably.
very favorably to other districts. I mean, Allison does an extraordinary job of crafting and managing the programs, projecting the budget. She and Avi work hand in hand. And I think the data on this slide shows that we excel in this area and that we hold up well with our comparables in the area. Hamilton Wenham is typically our most like comparable, and I think I can't really see the tiny numbers, but I want to say their out of district heads is close to 50. We're in the 50 range.
Blow it up a little bit more. Is it 40? Am I even looking at the right line? Is it 45, Pam?
You need to look off to the right-hand side. What it's basically showing you is if you slide to the right when you're blowing up, it's very hard to see it all. It's posted online and you can look at it, but there's a number. I'm putting my cursor on it. And it's
Hamilton Wenham is 46
yeah,
kids.
It's 46 and it's $4 million.
Yeah.
If you put that aside, then the column that really strikes me and helps me assess how we're doing in comparison to others is the percentage of the total expenditures, meaning what part of what is the portion of the overall budget that's attributed to special education. And you'll see that we are on the lower end of that scale, but yet in a range with others in the region. So I don't think we're an outlier by any means. I think right now we are tight. But what we know about special ed, how we talk about it every year, is we manage what's known to us, but there are many unknowns. So you can get a lot of curveballs. And I think what Allison's laid out for you tonight is everything we do to be best prepared to handle those curveballs. So we manage the levers that we can very tightly, so that we have some capacity to address things that might come out of the blue for us. So happy to answer questions about this chart. We're here to answer any other questions. And I think we have a few more budget items to get to. Very important, though, I think that we take some time on this because it's such a large piece of the work that we do. And Allison is just so expert in the field. She makes it seem very easy, but I know tons of work goes into it.
So I just have one quick one. It looks like Linfield was on the low end of that range at 21%. I'm just curious, is that because they do a ton of stuff in-house as well, or is it more just the way the numbers worked out for them, or who knows?
We've theorized one thing, and I'm happy to look into it. I know the superintendent in Linfield. They are geographically fairly well situated. So one of my curiosities is, do they realize some savings in transportation where we are not geographically well positioned when we're moving kids to out of district placements? That's one thing. Allison, what do you know about their programming?
They do have some specialized in-district programming. They actually just contacted me because they are interested in trying to replicate one of our programs. So I'm meeting with them next week to give them some advice about how we did it. But I know they do have some specialized programs. And I would agree with you about the transportation. The transportation has been a big budget driver for us. We're not as close to a lot of the programs. And it's the longer commutes, the COVID related distancing requirements and all of that have conspired to raise our transportation quite a lot. Not that Linfield is immune, but they do have a shorter commute to some of these placements.
A question. Is there, this is excellent information, by the way, and it's an impressive program, and it's good to learn more about it. Is for, as well as we appear to be doing, are there any aspirations that you have for overall for the program to head in a slightly different direction anywhere? Or is it just kind of keep on keeping on?
That's a good question. I'm actually very, very happy with where we are right now. In terms of aspirations for additional programming, our space is limited to do that. I did start a new program this year that I mentioned, the ACE program, and so my current aspiration is to continue to develop that program, because we started to have enough of a population to need that kind of programming. So that is an aspiration, and just maintaining the quality of our programs. It's a lot of ongoing work, training. The personnel piece is, and keeping the best people on staff is incredibly important to our programs. I mean, it's really everything, like having great teachers, providing people the training and consultation they need. So it's a lot of work to keep it at that level. So I don't have a vision to, for all that much more expansion, but just, introducing the ACE program, having that be successful, and really maintaining the quality of our programs. I would love to take a few more tuition students if and when we have space. But other than that, just keeping it going at the level of success that we're finding now.
Andy, two things I would love to see, and I don't know if a postgraduate transitions, we would over time have the numbers to sustain it. I think we're in a bit of a bubble now, but I know that would be a nice program to have if we would have the enrollment. But I think pre-K is the precursor to all of this. And I would love to, we've had a wonderful first year expansion of the pre-K. Allison's responsible for that as well. Again, along with Avi working on the business model for it. But if we could ever expand that program, I think space may be an issue, believe it or not. I know we had the big debate of the 2 or 4 classrooms, but the way the numbers look now, I think we would be able to fill those 4 classrooms if we had them. So it's finding a way as we go into our next building project to make sure we build in capacity to expand that program. Because I think bringing kids in, I think it will be a mandate sooner than later, but just having kids in the system earlier so we can begin assessing and developing them, I think serves their needs and the district's needs in the long run, and it readies them for kindergarten and maybe to potentially stave off the need for some of the special ed services down the line.
Thank you.
I'm glad you brought that up, Pam. We've expanded our pre-K this year as well, and are continuing to build that out. We had a very hard time with our preschool enrollment, but that all changed this year with the new memorial building, and we expanded to a program that goes until 3 o'clock. So it's a full option for a full day program, and we're basically now full when we were really struggling with enrollment before. So to keep that developing, I'm really glad you mentioned that, Pam.
I just had a question. If I recall, the pre-K program, is that a tuition-based program? And then if it is, can you comment just on the cost differential, or is it breaking even, or what's the expense to revenue look like on that?
We're all smiling on that one.
Yeah, we're doing great with that. I'd like Avi has probably more up to the minute information on that, but we've just been doing much better with that. Avi, do you want to?
Yeah, I didn't bring all the numbers there, but I can tell you we made a presentation to school committee where we talked about increasing the program duration for time of day, and how many. I think we were targeting 11 students to break in on the incremental costs, and I believe we're closer to 17 or 18. So that's been a really big success. So I would say right now we're more than paying for the investment in staff. It's yielding a savings.
And for those who don't follow pre-K, the basis of pre-K starts with the need to service special ed students between the ages of 3 and 5 before you're ready for kindergarten. So we have students who are receiving special education services at district cost. The Peer Pals, which is where we've driven up enrollment and we're charged tuition, defray the cost of the program that we have to have by mandate. And now we're starting to see, I think you told me last that we are putting a little money away for next year. We were able to do this with minimal cost to taxpayers in the district because we got another one of those, is it community inclusion grant? It's the regionalization grant that's available through the state. And we positioned the pre-K as a regionalization project because it serves both towns. And I believe it was about $100,000 that we received to launch the program. And that's how Allison also launched the Earl program when she first started it. Which gives us a little bit of a reserve to get going in case our numbers didn't land quite where we had anticipated.
And now that we have 2 classes, we will typically save 5 or 6 slots for students who need special education services, but we have a maximum of 15, that we can go to a maximum of 15. And so we've been able to take 10 or 11 Peer Pals in each of the classes, and we just saved some seats for special education students because we're mandated with that. So it's been working out really well in terms of defraying the cost that we must have for special ed students.
Great. So just in the interest of time, I think the only other thing that we wanted to touch on tonight was just a little bit about reserves, which I know came up earlier in the conversation, and some of the facility and capital needs that we have. But we can go back through questions as people have them about any of the things that Allison was presenting on or anything else that you want. So if it's okay, I might just move to that next area, and I'm going to try blowing up the screen a little bit. So on the reserve side, you can see the table in the middle that shows kind of an unaudited number of where we're ending. That number should be finalized soon. And one of the reasons it's still unaudited is because of all the back and forth on the federal reimbursements with, I saw Andrea on the line earlier. She's been an amazing help, as has Jeff Soulard over in Essex, as we've been kind of working out potential contributions to our COVID expenses from town, Manchester and Essex CARES funding. But you can see, as I mentioned, we're around 13% of budget, but we've already approved and been spending some of those funds on things like the Essex playground that we put in. As you probably know, there are age-appropriate playgrounds that came in with the Memorial School. We're required to have a separate pre-K playground, which we do. And then at the front and back of the building, there's a K through 2 playground separate from the 3 through 5. If you have kids who are school age, you know why that's a good idea. And so at Essex, we've obviously had the legendary Eagle's Nest that kind of ran its course. And so we put a playground in there. So that's just over $350,000 contribution. That's up and running. If you haven't been there, I suggest you bring your kids. It came out great. Same provider that provided the playgrounds to the Memorial School program. And then also the technology, you can see here, approved stabilization uses. We presented to school committee about what it would take to ensure that the technology that came to the Memorial School with the new building project that was funded by MSBA and by taxpayers would be equalized in Essex Elementary. And so there's been a big influx of technology there to match that program. So we have an equitable program across the elementary level. So that right there is $550,000. Now, that's all from stabilization. For those of you who are not familiar with it, our major 3 categories of reserves are excess and deficiency, which is what regional districts have at the end of the year if revenue is greater than expense, and it's a cumulative total. Stabilization is a special reserve fund that districts can put money into if it goes through your town meeting budget, related primarily to facility-related improvements. And SC is school choice, where that balance has been very steady recently because we're taking in the same number of kids and we're using the amount of money we get in a given year as a financial offset to our costs. But that's been stable of around $1.6 million. So you can see quickly, we're already at 10% based on things we've already spent. And we're talking about a carry forward $335,000 usage. That's that first line of approved usage for 335 is the amount that we put into the fiscal 22 current year budget as a revenue offset to expense to help keep assessments in line. Particularly last year, there were some conversations about understanding that as apportionment split, and it was higher for recently for Essex than for Manchester. Could reserves help to offset some of those costs? And so that is going to be carrying forward currently into the 23 budget. So that will bring the 10.3% below. And so I think before, we know that with a $648,000 gap that there, reserves could definitely play a role in that because otherwise we're going to be cutting our level services program. And I'm not sure that the community after several years of reductions is looking for us to start decreasing services that we're offering. And so that's where that tension comes between revenue solutions and expenditure solutions. But it's important to remember, obviously, that reserves are really primarily needed for capital uses. And I'm going to blow up the screen a little bit so you can see the bottom are things that we've talked about that we've been able to achieve already. And not all of them have been through our own dollars. Town of Essex has been able to help contribute about $140,000 for the heating controls program through the Green Communities grant. I talked about the technology items that we've been investing. Increasingly, as you look to the top half of things that need to happen, you're going to see that obviously with the new Memorial School, we're going to be looking a lot at Essex Elementary and also things that will come up over time for the middle school, high school. So the turf fields, typical useful life of 8 to 10 years with a warranty of 8 years is a good indication. We've really through maintenance practices stretched those fields, but at some point they need to be replaced. And so right now we've got a plan to replace Highland Field, the one at the middle school, high school, this summer. And we've got a school committee subcommittee that's working on that RFP process. And we've also started to talk about the Brook Street field, which is, because of the type of construction, in better shape. It's a shared asset through the regional agreement with the town of Manchester, even though it flows through the district's budget. Town of Manchester has some of its own usage for its town programs, and the regional agreement has a funding mechanism for a portion of the funding for repairs and maintenance to come from the town for that proportional use. So you can see that item down below. But I think it's really important to touch on some of the things that are happening at Essex Elementary as that building, which is really very similar age to Memorial, starts to get older. We know that we're going to be putting a backup boiler in the current year. That needs to happen. It's best practice to have two. And just think of a 8-degree day. If you have any hiccups with your first boiler and it goes down, you have a real problem there. And so we have two, but the newer one was put in about 2008. The older one is much older, and it's just not been able to last. So that needs to happen. But there are other items too, as you start to see things like the roof replacement, which could be 5 to 10 years out. I know that if you follow our capital budget and you know that the middle school, high school debt completes in 2034, I don't think there are any estimates that the roof would last that long. And so what some of these items start to bring up to mind is not only why we need our reserves, but also the type of timing that we might be looking at for an Essex Elementary analysis and solution. And so one of the things that we're going to be doing in the coming weeks is putting out a new bid for an updated quote unquote Habib report. The Habib report, if you may have heard about it, was the facility condition index that we did for both elementary schools prior to beginning the MSBA process. And it went through every aspect of the building, from site to envelope to, mechanical systems, to say, how much longer does it have? What would it cost to replace? So we can start to really make a data-informed decision about what the timing would be before we get to a situation where we're throwing good money after bad on a building that's over 50 years old already. So I think this is really important for people to understand. This is a big part of what we want the reserves for, to give us a little bit of time while we do that analysis. But clearly, from a program perspective, with a new building in Manchester, it's important that we move quickly to at least assess what we have at Essex Elementary and what we might potentially do about it, because I'm sure there are families who, just like we want to have the playgrounds and the technology equalized, clearly the building is something that, from an equity standpoint, we need to be considering as well. So, and with that, I think the last thing we want to get into before we just open it up for questions is just some of the potential ways of closing the gap that we've been talking about. And you can see, first, we have been putting in about $500,000 to $600,000 of OPEB. We haven't spent that money yet. We have, I think, between $3.5 and $4 million, depending on which budget year I'm including, in there already. So a potential use of $150,000 to match the growth in retiree healthcare could be a great way to do that. The OPEB trust fund is allowed to be used for retiree healthcare costs. So right now we've just been building, but that might be a good way to offset some of this gap. And then we talked a little bit about tuition for kids who might be in the 18 to 22 range. That could be an area where we look at, because it's time bound, for maybe using some of our reserve funds, which are obviously one-time funds for maybe costs that are time bound in need. We also do have about $345,000 in the budget for what is our best estimate of increases in out-of-district that we're expecting in the current and coming year. It has been common for us to include those in prior years. Our out-of-district numbers are name by name, student by student analysis. So I would say that the fact that they're in the budget to begin with represents the fact that we think there's a very decent likelihood that could come to pass, that we would need to have those costs incurred. And so that's why they're in the budget. Could we take them out and say, let's just wait and see, and then it doesn't have to flow through the through the budget. And, that's a one-time use of reserves until the subsequent year when you have better visibility. And that really brings up the issue that right now we're trying to budget in December and January for things that really won't happen until, several months from now. And a lot of these needs can change over the course of a school year, for sure. So, and I think you all know why revenues are important, and that's something we talked about. And clearly with potential borrowing coming down the pike, we want to be aware of the fact that that's helped us to keep our interest costs low and much lower than we talked about at town meeting when we pitched the memorial school. But clearly the capital projects, those projects, the ones that are imminent need to go forward. I think it's safe to say that we're investing only in the items that are necessary for either health and safety or for, in the case of the technology, equal access across the program. So we're not looking to drain that fund, but we know that we have a lot of liabilities there in terms of costs that will need to be addressed sooner than later. So with that, I'm going to wrap it up so we can open it for questions and any other things you want to hear more about.
So,
Thank you,
so
Avi.
Avi, this is Mike here. What is the CapEx number? Because you mentioned critical CapEx needs, and when I looked at that line by line, that adds up to 3.3 million, right? Some of it's ranked high, some's medium. Do I just add up the high ones? I mean, is that kind of the way?
Well, right. Yeah. So the answer is that, we don't have a kind of right now, because of the fact that we have essentially a revenue gap in our budget that's structural, we don't have a commitment to spend X amount every single year. So what we're really doing is looking at the CapEx number of the things that we think are likely for the coming year. So I would say, yep, it's clearly going to be the top two items. Let's just say that's $725,000. I think that that's your safe bet because those are items we're certainly planning to do. There could be some additional costs, $30,000 on the security cameras that you could see. Those are items that I think could happen between now and the end of summer. So if that answers your question.
Yeah, I mean, no, that's helpful. But I guess if I try to go worst case scenario, which I'm sure we wouldn't get there, but let's just say for, that adds up to about 1.2 if I add up all the highs, right?
Yeah, there's some discretionary items. Like we're not going to do Brook Street this summer at this point. If nothing else, then because of all the permitting that I think is going to be required because of where it's located and what our experience was last time. It was a very involved process. I don't think it could get done in time. But it is safe to say that the Brook Street will have to happen within the next, 1 to 2 or 3 years.
Okay, so I'll stick with your original. So basically the first two items, that sounds like those are kind of 99%.
Yep.
Yes.
Yeah, and I would add the security. So I would say about 750 is a good estimate for now.
750. Perfect. Thank you.
Yep. Other questions?
Avi, I know we always ask about apportionment. It's early in the program, but again, you're looking at about an $850,000 increase, I think, for the whole district. And I'm just kind of curious, percentage-wise, how that breaks toward Manchester and how that breaks toward Essex. And the earliest look on that possible is the best, because that's ultimately what we're all collectively signing up for.
Can you see my screen right now on the budget document?
No,
This says revenue.
No,
hasn't
right.
changed.
Still on
Hasn't
capital.
changed. All right. I'll be right there with you. So this is the revenue page on the full budget document that we just unveiled in draft format. You can see in the middle here is the assessments. And as you move over to fiscal 23, last year, you can see it's kind of interesting. Manchester top row, 3.3 versus 3.2. And it started to go down here for Manchester relative to Essex in the past couple of years. So for right now, there's a lot of really surprising changes here. So last year, 3.2 for Manchester, 3.96 for Essex. At this point, it's looking at close to 5% for Essex on a 3.5 total with a 2.67 for Manchester. Very, very different. And I have some information I can put up that just shows some of the inputs around enrollment that's making that happen. Of particular note, you can see the dollar increase in apportionment is greater for Essex this year for the first time, I think, ever, even though the total percentage, you can see 16 versus 9. It's still, roughly 2/3, 1/3 type of a split, but small changes in apportionment have been adding up. And so that is really a big issue that's been coming up in our conversations with the town of Essex. And they've been starting to talk about things like, how do they, if the number is 3.5 for the total budget, same as last year, and the year before was 3.2, 2.85, these are not budget breaking numbers, but if you're the town that's looking at a 5% increase, it's very stressful. And so I think they've been talking about how they can use separate funding streams to account for the amount over the midline. So in this case, I think they're $128,000 over the 3.5% midline, and Manchester is $128,000 below. So what I'm going to do briefly is transition to a very early preliminary draft apportionment slide. Can you see this?
Yes.
Okay. And just for the people who might be new, I'll just start quickly with the how the formula inputs break down. The three inputs are property values, EQV, student enrollment, and town population. And so it's about 50%, in this case, 46% of the apportionment that comes from enrollment. And the other two break out about the same amount, a little bit more for population. And so this is the first year with new decennial census data, and you can look at the percentage for Manchester versus Essex. It's kind of almost no change, which is interesting. So if you're wondering about that, I think I looked at it. It was less than 10 basis points of impact to apportionment. And property values have changed a little bit when you add the total and compare them to the point where Essex is picking up a bigger share proportionally, slightly. And again, it may be only 60 basis points here, but that has an impact. But the real story is clearly in enrollment. And you can just see in the past year going from 62, 61 to 59%. That's really driving the difference. Now, there's a 3-year smoothing formula in there where we use the 3-year average so that single year changes don't unnecessarily impact one town. But even with that, it's having an impact, and the most recent year increase has been a change. Now, there is some important things to consider because these statistics can be a little confusing. We've had some COVID-related changes in enrollment that have impacted, and so fiscal 22 enrollment is statewide. I think the State Department of Ed has really avoided looking too carefully at fiscal 22 numbers because of the fact that we had a lot of changes in enrollment with remote learning, kids moving maybe to private schools or whatever. And so really fiscal 23 to 21 is a better comparable, but I think Pam is probably better able to talk about some of the things on the enrollment side that we've seen that make 23 versus 21 a better comparison. I don't know if you want to touch on any of that, Pam.
Well, all I can say is that for planning purposes, we've been going back to October 19 data as our baseline for real enrollment, because we did see quite a bit of students electing to stay home and undertake, they were calling it homeschooling, but it was really just a pause during COVID where people were staying at home, accessing some of our resources and trying to make their way. So that's where I think we've seen the greatest fluctuation. And if I recall, the largest cohort of students that elected or families that elected to do homeschooling was out of Essex Elementary, which caused a bit of a bump there. So it caused a drop and then it caused a spike when people re-enrolled this fall.
Yeah, and I can throw up some enrollment slides if people want to see them, but at the bottom here, you can see that if we were looking at a straight line 3.5% for both towns, that would be these numbers. And instead, we're looking at the apportionment formula. So that's where you get to this number of Essex being 128 over the midline, even though their total increase is going to be 432 and Manchester 416. So, you know, I'm sure there are people on the finance committee who remember the times where, you know, we had been asked the question, how come Manchester is picking up 75% of the increase in costs? And so that's when the apportionment formula was going the other way. And so I think, you know, we actually had some slides that show that, you know, over time that's changed. I could probably throw one of them up if you give me a quick second, which I think is illustrative. But that's why I think we're starting to hear from the town of Essex about whether it might make sense to have them start putting aside some funding to deal with what might be more about who's using more or less of the services. And I'm just trying to see here how I share that. So this can give you a little sense. The blue line is the midline of what's happening in total assessment. And Manchester used to be there is the red line. You could see they used to be above the mid and Essex was below, and now their line is above the mid. So you can see in the chart at the bottom, Manchester was 44,000 over, 68,000 over. And those were the years where I think there was concern about what that was doing to your levy limit. This is prior to the current year. You could see that the total cumulative change was not that significant. Other questions?
Yeah, I had a quick question. I know this is small dollars, but there was a line up on the very beginning about other revenue, and it was, I don't know, 29,530 grand roughly. Just what kind of things are going in there?
Let me see here. Was it this area here?
No, like way back at the beginning, like slide number 2.
Yeah.
Typically fees, right, Avi?
Yeah, I mean, the majority of it is Chapter 70. That's the biggest area. It's about $3 million. And then right after that would be regional transportation, which we're budgeting around 270,000. So you could see from the towns, which are providing the 85%, right next biggest one, 3 million for Chapter 70. Right next one is, 270,000 for regional transportation. So by the time you're getting into the fees that Pam's talking about, like student parking or bus fees or whatever, you're really looking at small dollars that don't have a meaningful impact on what they can do.
Yeah, no, that's fair, but I guess, how often do we do some peer-to-peer comparisons on those, whether they're the athletic fees or student parking fees? It just seems like it's an area. I get that it's not big dollars and it's not going to move the needle, but if we're way below peers, like, why not, right?
We do that consistently. That is a good point, and absolutely. So on the athletic side, we've tried to in the past be looking at fee increases every 3 years, and in that time we would do the comparable analysis just to give people a little time. I think there's question about whether maybe we would just build in a steady state but lower increase going forward. But either way, absolutely.
Like I've done my own anecdotal peer-to-peer on athletic fees because I'm paying these, and we're cheap from what I can see. So it's, again, I'm sure doesn't move the needle a lot on the total dollars, but it's, to me, like, why not? If it's an extra source,
Yep, we don't disagree with that at all. Timing is a little bit important because the last 2 years, our program for athletics has been very different than it would be typically, and usage has been very different due to COVID. But I think we're in full agreement.
Yeah, like I have some friends in Masco where I think maybe half of their fees.
Yep. There's definitely room for increase there. And it's funny because Mike, we were just talking about this the other day, and Avi alluded to it. Are we better served by hitting a reset of the fees and then just growing it at our annual growth rate of 3.5%? So we don't go through, because typically when you start to do the comparisons, it takes on a life of its own because there are people who would like to see different fee structures. So you spend a lot of time not talking about the need to grow the pot to cover the costs which are increasing steadily. It's really, it just becomes an entire review of athletics. So I'm guessing you're going to see that as part of next year's budget process.
Yeah, I mean, just whether it's athletic fees or even student parking fees, to me, that's,
Yeah.
an inelastic demand curve, as they say,
Yeah.
So anyways, that's all I had. Thank you.
Avi, I had just one question. I know I've asked this in prior years, is you put this budget together, but it doesn't really kick into gear for another 6 months, give or take, and then you live with it for another year after that. What aspects of this budget worry you, or what are the things that could go wrong? Revenue or expense side?
Hey, Pam, do you want to answer? I can give you a financial answer. Do you want to give your perspective?
I'll get my
And as
answer is
you-
probably the same as yours. Obviously we're always worried about, are we going to get a move in that we can't handle? That's just going to bust the budget. There are mechanisms, there's a circuit breaker, there's a way to manage it. But I think my overall worry is more, what is our long-term plan? We know that in the COVID year and discussions with school committee, this is not a year to be reducing services. We're still not stable. I mean, if you watch what happened just coming back from Christmas break, there's still a lot of emotion around COVID. There's still a lot of uncertainty. There's a lot of up and down. So I think the approach we're taking this year makes sense for the time we're in, but it's not sustainable for the foreseeable future. So we have to start talking very honestly and openly about how we're going to correct things, either through service reductions or, an override and a correction to help right the ship. So what we're trying to do is show clearly where we're seeing areas of growth that we can't control for, and express to people that we're doing everything we can to control, and demonstrate to people we're doing everything we can to control the variables that are in our domain to do so. So I think my biggest worry is we're going to get hit with something that we can't anticipate at this point, and it's going to shorten the life, shorten the runway to when we need that correction, and we won't be prepared for it. So I don't know if that's too different.
Obviously, speaking of uncontrollable things, inflation, I don't know how that sits in your worry lineup of worries. Has inflation been pretty much taken into account in some of the many, many calculations you need to do in producing this budget, or how does that play out?
It's a great question. Well, this is one of those areas where being not a market supply demand driven business as much, I think plays a little bit in our favor. We tend to have contracts that play multiple years on things for revenue. There could be some in health insurance, but that's why that's at 6 to 8% and has been for years. So that's a sector of the economy that's had inflation, I would say, a cost inflation due to our country's innovation in healthcare that we've been absorbing, and that's why that item at 20% of our costs is always a threat to a levy limit budget. So those are the big areas. I think for out of district tuitions, as an example, those cost increases are mandated and controlled. There are some ways for programs to charge more, but that's controlled that way. I talked about out of district transportation. We're definitely getting hit there. And I mentioned how that's an area where you can't really lock into multi-year contracts because the needs of what you have for a student change from year to year. And so we really are at the mercy of the market there. And that's about a $200,000 hit to the budget. So I'd say that's probably the biggest one. We did face, when we re-upped our contract for regular day student transportation a couple of years ago, a pretty big hit where I think it might have gone up 25% when the economy was flying pre-COVID, and we were at full employment. People can remember those days. But we did just re-up our transportation contract. And because it was in the down period of COVID, the timing was great. So we didn't get hit there. And the last area is utilities. And, it tends to be one of those areas where as soon as the market, crashes, the stock market, or the economy starts to down, I start buying longer term contracts to lock in the savings there. We are, I would say, mid-duration, and we'll have some opening up in the end of the current year and some into next year. So we did pretty well on utilities for a couple of years because we bought during the downturn. Right now, I don't have that factored into the budget because I think we are, coming back to baseline. So I think we're good there. That's probably more of a 3 to 5 year budgetary impact. Does that answer your question?
It certainly is a good step towards it. Yes, thank you.
Any other questions for Avi or Pam or Allison?
So something to think about just in terms of, what's the next 10 years looking like, or 8 years or whatever time horizon. But I would love to avoid the override for operational adjustments and new debt exclusion for Essex Elementary. So I think we need to spend some time thinking about timing here and what's likely to happen when. That would be a double whammy that I don't think our taxpayers would be thrilled about. So I don't have an answer. I'm just putting it out there as a topic that we should dive into.
Agreed.
Yep. Multi-year planning is my kind of music. So I would love to talk about that. I think the partnership with the towns has been amazing, having been here for a while. So I'm super thankful. We have a great group that I think looks beyond the current year. We've tried to show the multi-year budgeting and the impact of using reserves. I think when you have a small amount in there for a given year, it's one thing. When you see the numbers start to grow, that's when the alarm bells for me start to go off that we need an end game strategy. So I think that's the operating side. I think that we're now coming up on 8 years since the last override and revenue correction. So I think it is time to be talking about what an appropriate strategy is there. For Essex Elementary, the building is not imminent per se, but I think, as you know from the last project, it's not a project that you can just push a button and go on it. There's a lead time. There's a lot of studying that needs to happen. And so by starting right now with the facility condition index and starting to give data to the community about, like I said, at what point we'll be throwing good money after bad, I think we're going to be getting the data to help inform those conversations, Greg. So I'm very excited to have them. And I hope that will help us to develop the best possible timeline. It's going to be challenging. So maybe if we can deal with the operating side sooner, it will give us the ability to deal with the fact that the capital will take a couple of years. Even if we press play right away on an Essex project, that's going to take some time to get going anyhow. So I couldn't agree with your big picture statement anymore. Thank you.
Yeah, Avi, have you seen the Essex enrollment that's slightly been trending up? Is it across a range of grades, or is it more middle high school?
It's funny because Essex isn't trending up. It's trending down at a slower rate than Manchester.
Okay, interesting.
So they're not outgrowing you. You're just shrinking faster right now.
Did we have any uptick in enrollment at the Memorial School when the new school came on?
Not yet. And I think give us a little bit past COVID. And I think you might see it. I think there was still some question as we started the year, what school was going to look like, would we end up back in remote? So people who had the opportunity to take advantage of a different type of placement. I know people who went private pre-K and private K didn't necessarily all come back, not knowing if they wouldn't have, the childcare service. So I think the old, if we build it, they will come is going to probably be true. It just may take a little longer.
Yeah, I know. I talked to a neighbor's little boy who was 6, and he said, I skipped back to kindergarten.
I mean, we just have to publicly thank everybody again for support there. The building is just absolutely beautiful. And the process was fun. I think it was just really from beginning to end, a real collaborative effort with our town partners, but also our project team and our OPMs. They were great to work with too. And the outcome is just fantastic.
Quick question. You mentioned the private school enrollment, and I'm sure there's some kind of long-term average of whatever we see X number of kids. I don't know, maybe every year after 8th grade going to private high school, whatever the case may be. And I'm just curious, have we seen any change in that over the past couple of years, like a COVID impact to that private school change?
Yeah, there's typically 200 or so resident students that don't take advantage of the public schools, and the averages tend to run in the mid-teens, mid to low teens at the elementary level, and then as expected grow as you get to the high school, and that can get as high as the low 20% mark for people availing themselves of private school. I think what we saw last year, and this is anecdotal from conversations with people, I don't necessarily have the statistics in front of me, but folks who really needed a reliable place for kids to be outside of the home during the day took advantage of parochial schools and private schools who went back in session faster than we did. I mean, that was our shortcoming last year. So what I don't have a calculation on is how many have stayed there to wait out the COVID rocky period and will be back, or how many people are just going to lock into that going forward. But it's something we're starting to take a look at. I think the memorial numbers are right around where they were intended to be based on the enrollment projections we had received during the building project. And Essex was down to about 188 students last year, and they're back up into like the 210 range. So things came back to almost normal, but we are in we've talked about it in the past, our enrollment has been trending down over the past few years. So it's a combination of declining enrollment and the COVID impact.
Do you get the data on the difference between how many students who enroll and who are eligible to enroll? Do you have good data on that, or is it anecdotal?
No, well, we have good data because they do a school enrollment report. So we were supposed to report out when we have students enrolled from other districts, privates report back to us. So we do have a master list, and that's where I get the number of about 200 some odd students who are residents collectively in the both towns, but aren't using our school system.
Okay.
And just to remind people, these are attachments that are in the budget documents, the enrollment by grade. And you can see a little bit in the early grades. Certainly the Essex numbers have popped up a little bit comparatively relative to Manchester. But then the next slide that's in there, just as a reminder for everyone, is the enrollment history over time. So I just want to remind you where you can find that data. And I would say that the changes that have come down have started to stabilize. Where right now we're about 1% difference. The 7.7% of the prior year, definitely a COVID number. So that's stabilized. But I think to Pam's point, I think we're feeling like the changes that are happening there really haven't fully shaken out, with things still happening with COVID back and forth. I think it might take another year, maybe two, before we kind of reset to where we were or where we would expect to be. And I do think that the new building will have some impact. Clearly, it's not going to change birth rates, but it may start to relate to things like move-ins, et cetera. And hopefully you have had a chance to be in the new building. So if you haven't and you want a tour, let us know. I'm happy to take anybody around to show you the building and some of the things that we went through as we were deciding how to build it.
Any more questions of Avi, Pam, Allison? Thank you very much for coming in. This was really great.
Anytime, we're happy to come back if questions pop up or things pop up along the way.
Thank you.
Thank you. Thanks for the support as always. Really appreciate it.
Bye.
Thanks you. Good night.
Kevin,
Good
Good
night. So it is 8:53. I'm thinking we,
Motion to amend the agenda.
yeah, I'm thinking we do not want to move on to reviewing the general government fiscal 23 operating budget. We'll do
Right.
that another night. Minutes. Gail, are you on? Where's Gail?
I am.
How many sets of minutes have you done that we haven't approved?
3.
3? Is it possible for you to send those to me again?
Of course.
And then I'll get them out to the board so we can approve them next week. I
Well, by
kind of
that
got
time, they'll grow. There'll be 4 or 5.
good. I just got way behind in December when I went on vacation and I haven't caught up, so. So there's no minutes to review. The next item on the agenda is the next meeting date and subject matter. Believe it or not, I posted an agenda today. Our next meeting is next Thursday, and Chuck Dam and Nick DeRozier's.
yeah,
Nate DeRozier's from DPW will be in, so we will cover the DPW, the water and sewer, snow and ice, everything to do with DPW, both operating and capital and the enterprise funds. And hopefully we can vote and get something done. Okay, does that make sense?
That's a lot.
That will take the whole meeting.
Yep.
Mhm.
Yeah, we gotta roll at a pace.
Is there anything else that people wish to raise? That I didn't
No, I
have on
thought
the-
there was a good discussion tonight.
Good, yeah, I thought it was very good. Thought it was very helpful having Allison there regarding the special ed piece, because that's always
Yeah.
been a big question mark. It was really good to hear it.
They've got a lot of moving parts. Andrea, thank you for the printed copies of the books. They're well done and a lot easier to follow than
Oh, good.
doing acrobatic across the screen.
Let me join that too, Andrea, for the same reason.
But I presume, so Greg, the stuff that you sent out earlier today, has that been updated in the online version too?
not yet, no.
Yeah.
Okay. Sorry, Andrea.
I was gonna say not yet.
Okay.
What did Greg send?
Uh,
I guess
I
I
just
missed
sent-
that email.
At the end of the day, I sent the updated, more in-depth budget sheet that Avi had on the screen tonight.
Oh, I got that. Okay. Nothing regarding town budget.
No,
Okay,
Okay.
thank
Good,
you. Okay.
good. Yep.
Trying to keep up. Okay.
so just while it's sort of fresh in your mind from what we just heard from the school.
Yeah.
There was a slide that Avi had that showed when we were, higher than the 3.5 because of enrollment and appropriation tilted against us, if you will. And then how that we have crisscrossed and now we're below the line. So there's been some discussion about when you're below the line, do you set some monies aside anticipating when you might be above the line? Or do you just find those extra dollars when you are in that situation? So Essex this past fall, they did put some additional monies aside because they knew they were going to be above the line for 23, and that they would need more support because it's more than their 2.5% limit would fund. It would take more than what they raise on 2.5 just for the school.
Yeah, I guess
something-
reaction to that tonight is we have excess levy capacity, and we also have an issue that we have large reserves. And so I kind of reject the idea of putting more into reserves to protect against future school budget increases. It just doesn't
Yeah,
make sense to me.
I agree with Sarah, and I would also say Essex is probably in a little bit different boat than us, right? In the sense that I get that the school budget is our biggest nut, as well, but it's even a bigger nut for them in terms of a percentage of their total town expenditure, right?
Not sure, but in terms of percentage wise, but in terms of a 5, they struggle much more to cover a 5% increase than we would struggle to cover.
Right. Well, if I just take fire department alone, right? Like our fire budget is enormously more than theirs as a percentage of the total budget because, right, they're all volunteers. So,
Right.
It just seems to me intuitively high level school budget represents a higher percent of their total budget. And that's why when it swings for them, it just causes them more of a heartburn. It's just,
And they've been spending more on other things recently.
But either way, I agree with Sarah's comments. So.
I think philosophically too, Essex, I believe, and Greg, correct me if I'm wrong, but I think Essex has lots of sort of stabilization or reserve funds. They've carved up a number of buckets that they put things in, and we tend to kind of go the other way where we've got reserve and stabilization and kind of that. Is that right?
That's true, yes.
So Maury, what's the significance of your comment?
I think we have more latitude to move money around to different places when we need to do it, as opposed to it being siloed in places where it takes a lot of voters to pull it out of here and put it into there.
Yep.
I was going to ask, sort of looking ahead for something that's not on a near agenda, maybe is the fire department. I've kind of raised this before. I'm just wondering how are we going to talk about staffing when we get to that? And are we going to have the opportunity for any sort of third-party guidance on the topic? I always feel a bit at a loss when I'm sort of, my only guidance is what the chief tells me.
We certainly are having the chief come in to a meeting to discuss things and.
Right.
I understand what you're saying.
That's a great point, Andy.
I'm wondering if I can ask a favor, Sarah, which is I'm not going to be able to make the FinCom meeting on the 27th. I have a conflict. I'd really like it if the fire could be not on the 27th, if at all possible, because I'd like to be part of what that I think conversation is very important. I think Andy's point is excellent. So if it's at all possible, I'd just appreciate it be another Thursday and not the 27th.
We'll probably do police on the 27th. And
Okay.
we can do fire on the February, what would that be? 10th, 9th or 10th?
Third.
No, it's before that.
Oh, no, you're right. The 3rd. You're right.
I'm kind of in the same boat that Peter's in, and I'm going to be off on the 3rd. Is it too late to push fire to the 10th? Because I think that's a pretty important one. I'm talking about the 10th of February.
Yeah, we can do that. So
Appreciate it.
There are some, retired fire chiefs that do consulting work. There's consulting firms that are available. I mean, if you'd like, I can try to reach out to someone like that.
Yeah, I wonder. I mean, I don't know. I think they all sort of drink from the same, kind of source. So I guess what I was hoping for was more of like kind of a measured, if that's even out there, a measured kind of a view versus the one that's, you know, somebody that's going to sort of, you know, cheer the chief on per se. You know, and the chief may be perfectly correct. He may be 100% correct. I just don't know it. And, you know, we've kind of suffered under this, you know, different perspective with different chiefs kind of thing. Although, you know, the last guy also pushed for additional staff.
I mean, is there a way of finding out how many departments have the 4 people on staff all the time that are our size?
Yeah, I can tell you very few.
Okay.
I mean, I can try to get a better number than that, but I just know that very few communities of under 6,000 have 4 on.
And do they then rely more effectively than we do on call fire?
No.
That's part of it. Or they'll rely more on mutual aid. I mean, a lot of communities of our size are not running ALS ambulance. We are an outlier with that service. That's unusual for a town this small to be providing 2 ALS ambulances.
Mm-hmm.
So that's a premium service that this town has chosen.
And, you know, I've lived here over 21 years and I only recall two major house fires. My memory could be blurry, but I only remember the Cabot one out on Proctor and the University Lane one. I don't remember other big house fires. So it's not.
Yeah, that's typical.
Yeah.
When I was in selectman,
It's why fire has gone into emergency medical. And that's
Right.
when I was
Yeah.
selectman in Hamilton, considered a fire to be something that caused damage of more than $25,000. And we didn't have, over the 9 years I was a selectman there, more than one every 14 or 15 years.
Right. Yeah. Sounds
Yeah,
like that.
I'm just kidding. Like, how is Essex surviving, quote unquote, right? Like, I mean, in the sense that, you know, we always hear there's issues with the call and the volunteer, but, you know, I kind of hear this every year and it's like, Essex is still there. Like, what, you know, right? I mean, is it like you said, Greg, they just rely on mutual aid, or are they just getting lucky? There's no house fires, or they contract out to private ambulance. I mean, it just seems, I don't know. I got a lot of questions.
Yeah, and, you know, depends who you talk to in Essex. There's some will say that they're probably 5 or so years away from losing their strong call. All right, they've been able to maintain a strong call force. You know, towns are different. They have different cultures. You know, there are histories that continue. You know, when I was out in Lenox, we had a very strong call culture. So it varies from town to town.
Well, we used to have a strong call department, and the problem is when you have more full-time firefighters, you don't get called as much. And
Yeah, it becomes a self-fulfilling prophecy.
right, yeah. And they want to go to the fires, not the ambulance.
Yeah. Yeah. And
I was going to say, when we lived in Newbury 20 years ago, every Saturday, all the firemen were down there. It's like a great big social event. And
Yes.
there's a lot of team and a lot of camaraderie around that. I also don't think they had the level of demand, you know, the population saying, we want ALS, we want this, we want that, we need everything. They kind of said, let's just bootstrap it and drink coffee and have fun, and we'll run out and put out a fire, you know. It would burn Christmas trees, and it was like the big event. It's a different philosophy, I think.
Right, yeah. Anything else?
Sarah, if I could make a comment on that, this is Jeff Bodmer Turner.
Yes, thank you, Jeff.
One of the things that I've heard increasingly over the last three chiefs in the fire department has been that the decrease in call is directly proportional to the increase in demand for training for call firefighters. It's a part-time volunteer position, well, basically volunteer position, but it's a very, very part-time position. And the amount of training that you needed now is the same as a full-time firefighter.
Yeah, that makes sense.
And so they have to give up time from their other jobs to meet the training need. And it's just not attractive to do. It's you know, as much as you want to go out and put out fires. And I wasn't sure of the implication, Mario, about burning Christmas trees, but
I wasn't going anywhere with that. I was just.
but even if you have that strong desire to serve in that capacity, the demand for training is such that it's really shifted the ground on what a call firefighter is. So I don't think it's a philosophical question as much as an inability to meet the demand for call firefighters because of the training needs.
That makes sense.
Then how would that explain the other towns around us that, like Essex and Hamilton Wenham, that have either 100% or, you know, majority call firefighter systems? Are they just every year they're losing some of the attrition but managing to get by, or?
I can't speak for those towns. I know that this is the comment that's been made by the chiefs, that not just Chief Cleary, but previous chiefs, that and also talking to firefighters on the force, that the guys who used to come in to do call firefighting, it's too much of a job now with the training needs, and they can't swing it and still support their families.
In
No, I
Hamilton-
get that, but then if you know, went to that logical conclusion, that would say that tomorrow Essex is full-time paid firefighters, right? Like, I mean, because like you said,
I don't know if
you
the training needs are a stated state set of training needs. I think they vary, like we've chosen ALS ambulance versus regular ambulance. That's not a state requirement. I think the training for a call firefighter may be variable.
right. Now
Greg,
now
can
that
you
would
help
make
us with
sense.
that question?
That would make sense to me, right? That would make sense, that
I
maybe
don't think
different
so.
towns, right, set their standards differently, so that's how they can manage to maintain and attract, right?
Well, on the ambulance side, yes, but not so much on the fire side.
Those state standards.
That is standardized by the state. So I mean, every you might say it's biased, but certainly every chief association magazine, or they all have articles about the dying call force across the country. It's a very common theme.
Killed off by regulation, perhaps.
And yet there's still many towns that have them, though, right? I mean, that's you know, I don't know. That's the part that's not syncing up.
Go up to the state of New Hampshire.
just go to Western Mass, right? I mean, you know, like
Same
Greg
thing.
was saying.
Yeah.
I mean,
Greg, I know in the past we talked about hiring on various firefighters. They would go through a fair amount of training and then they would leave and go to other communities to work. And I don't know if that trend has perpetuated itself, still an issue or not, but is that something we're dealing with or not anymore, or what do you think?
We don't have a mass exodus, no. We lost a couple to other communities, but no, we're not hemorrhaging by any means.
But Maury, we did talk about that when you were chair, because there was a discussion with the chief at the time of, could you have a contractual agreement with a firefighter? Once you'd gone through the training, you put in all the time, and then they decided, I'm going someplace else.
Right.
Now, remember, we had the chief, I think that Greg, the chief of Gloucester's fire department was here for about an hour and a half, you know, so we've had a few of them.
Didn't hear that last comment. But we had a little spat there where we lost, I think, like three new hires fairly soon after they got fully trained. But that hasn't happened of late.
I mean, I guess the $64,000 question, to build on what everybody's just saying, is the market wage for a firefighter, I would assume, I could be wrong, is in a pretty tight range, or no? Can it vary really wildly from town to town?
Depends whether you live in Methuen or not.
No, but
Got a
right,
few
so for us,
outliers.
it'd be Beverly and Gloucester and Peabody. You know, do we vary dramatically with the towns and cities near us? I would assume no, but I could certainly be wrong. I don't know.
We're fairly competitive from a pay perspective. We can't compete on volume of calls.
Fun,
So
the excitement.
exactly.
Yes.
Yeah.
Anything else people want to discuss? I will take a motion to adjourn.
So moved.
Second,
I'll take a roll call vote. Mark,
yes.
Peter,
Yes.
Dean,
Yes.
Andy,
Yes.
Mike,
Yes.
Lori,
Yes.
and Sarah votes yes. Thank you all so much.
Thank you, Sarah.
See you in a week.
Thanks, Sarah.
Okay,
Everybody.
Everybody.
Take care.